Welcome back to the deep dive. Look, we all know the feeling. The crypto world moves at lightning speed, doesn't it?
Oh, absolutely. Blink and you miss something major.
Exactly. It's like trying to drink from a fire hose of information. Just keeping up feels like a full-time job, let alone actually, understanding what matters.
That's overwhelming.
It really is. And that's precisely why we do this.
Hmm.
Think of the deep dive as your curated shortcut. We sift through the noise for you, boiling it down to the core insights you actually need.
Cutting through the clutter.
Precisely.
Right?
And right now, the market isn't just buzzing, it feels like it's accelerating, and there's one massive question on everyone's mind. So today, our mission is crystal clear. We're taking a deep dive into what looks like a confirmed crypto bull run. And more specifically, we're zoning in on these so-called blue chip altcoins that seem primed for potentially big moves.
Right. The ones with staying power.
Exactly. We're going to dissect the latest market shifts, really get under the hood of the fundamentals and the technical signals for some key altcoins, and crucially, explain what this whole picture means for you, the investor.
And it's not just about the what, is it? We're aiming to connect the dots, synthesize all this info from different angles, so you get the why it matters. We want to give you a clear, structured view of the altcoin landscape right now, going beyond just headlines to, hopefully, some genuinely actionable insights. Understanding the forces driving these trends.
Okay, let's dive right in then, because the sources we're looking at are making a pretty bold claim. They're saying quite clearly the crypto bull run is confirmed.
That's the big one.
That is the big one. The green light, maybe. This isn't just wishful thinking anymore. It seems backed by some really solid, pretty undeniable market indicators.
Yeah, the data is pointing that way.
We're seeing Bitcoin and Ethereum, the big two, not just nudging towards their all-time highs, but actively testing them, sometimes pushing past them.
Which are huge psychological levels.
Huge. And for anyone tracking this space, those aren't just numbers, they're milestones, right? But maybe even more telling, the total crypto market cap, it surged past, get this, $4.13 trillion.
Wow.
That's a staggering figure, way beyond previous peaks. What does a market cap like that truly signal about this particular bull run? Is it different this time?
Well, yes. And I think that number, beyond just the sheer size of it, it signals something profound. We're seeing institutionalization happening at scale.
Okay, more than just retail excitement.
Exactly. Look, retail interest, the fear of missing out, that's definitely part of it, always is.
Yeah.
But $4.13 trillion, that represents serious new capital flowing in from the traditional finance world.
Like hedge funds, asset managers?
Precisely. Hedge funds, corporations, asset managers, they're now increasingly seeing crypto as a legitimate asset class, something you have to have exposure to. And that changes the whole dynamic.
Yeah, so.
It changes the velocity and maybe more importantly, the potential sustainability of this bull run compared to, say, 2017 or even parts of 2021.
Right, those felt more retail-driven, maybe more volatile.
They often were. This cycle seems to have a deeper, more institutional foundation. When Bitcoin and Ethereum lead the charge towards all-time highs, it acts like a beacon. It draws in more sophisticated capital, signals better market health, more maturity.
And that optimism, how does it show up?
You see it everywhere. Massively increased trading volumes, both on DXX and CEXs, a big jump in active wallet addresses. Just a general, palpable sense of confidence that, okay, the ecosystem's hit a new phase of growth.
Okay, so if this bull run is confirmed, and it looks maybe fundamentally different with this institutional backing, how does that shift things for our listener? Whether they're just learning or actively investing, and why is that distinction so important right now? There's always that risk of, getting carried away, right?
Right.
Irrational exuberance.
That's a really critical question. Because yes, a confirmed bull run fundamentally shifts the whole risk-reward calculation. You move from a defensive posture to potentially a more aggressive growth focus. Well, in a bear market, your strategy is often about preservation.
Right.
Finding projects that can just survive, maybe build infrastructure quietly. But in a confirmed bull run, the focus flips. It becomes about maximizing potential gains, identifying assets with that exponential upside.
So projects that were quiet might suddenly surge.
Exactly. Dormant projects can suddenly go parabolic. And even for established blue chips, it's not just growth. It might be a fundamental re-rating of their long-term value proposition.
But the exuberance risk.
It's always there in crypto, let's be honest. However, the signals we're seeing this time, the institutional flows we mentioned, maybe clearer regulations emerging in some places, the actual increasing real-world utility of many projects, It suggests that while speculation is definitely a factor, this surge feels underpinned by more tangible adoption and development than maybe ever before.
Okay.
And that's why it's our starting point. It frames everything. It tells us conditions are potentially ripe for growth, but it also means we need to be smarter, more discerning, looking for genuine utility, strong fundamentals, not just hype.
That makes a lot of sense. Separating the signal from the noise, really. Okay, so with that green light potentially flashing, let's pivot to these blue chip altcoins. We borrow the term from TradFi, but it means something slightly different here, doesn't it?
It does, yeah. In crypto, blue chip isn't just about market cap, although that's usually part of it.
Right.
It's more about established projects, ones with a proven track record, resilient tech, significant real-world use cases, and a solid development roadmap.
So they've been around the block, survived a few cycles, maybe?
Often, yes. They've shown consistent innovation, built strong communities, and crucially, they solve a real problem or serve a tangible need in the digital economy. They're not just hype. They have solid foundations.
Handling real volume or real value locked.
Exactly. Significant transaction volume, maybe high TVL and DeFi, and often exhibiting technical chart patterns that suggest strong momentum. They're the workhorses, the established innovators.
And our sources pinpointed a few specific ones that are really standing out now. Let's get into them. Starting with Tron, TRX.
Yeah, Tron.
Okay, so with Tron, the first thing that really jumps out from the sources is its role with Tether, USDT. It apparently handles the most Tether volume globally. Billions. Every single day.
It's an astonishing figure.
It really is. What does that mean, though, fundamentally?
Well, the strategic significance here is huge. Tether, USDT, it's basically the lifeblood of the crypto economy, right? It's not just for trading.
No, it's used everywhere.
Everywhere. Arbitrage powering DeFi apps, global remittances, which is massive, especially in developing countries. It's like the default stable medium of exchange.
So Tron handling the most volume means?
It means Tron has quietly become a kind of de facto global settlement layer, specifically for the stablecoin economy, particularly USDT. This isn't just fleeting adoption. It's deeply embedded, consistent, real-world utility.
Making it more resilient.
Incredibly resilient, almost regardless of short-term price swings. That level of activity points to really robust network health, widespread usage, and strong ongoing demand for Tron's actual services. That's a hallmark of a blue chip. It shows the network is efficient and trusted for critical stuff.
Okay, interesting. Beyond just volume, though, TRX also has this deflationary tokenomics thing going on, daily burns. For someone maybe less familiar with token design, what does deflationary actually mean for a TRX holder? How do daily burns impact supply and demand?
Okay, think of it like this. Imagine a rare, collectible, maybe limited edition sneakers.
Right.
Now imagine that every single day, a few pairs of those existing sneakers are just destroyed, permanently removed.
Okay, fewer available over time.
Exactly. That's what burning tokens does. TRS tokens are permanently removed from circulation daily. So unlike fiat money where governments can print more, or even many cryptos that inflate, TRX's total supply is designed to shrink.
And if demand stays the same or goes up?
Basic economics, right? If demand increases, which you'd expect in a bull market, while the supply is actively shrinking, the scarcity should, theoretically, put upward pressure on the price of each remaining TRX token.
So it benefits holders directly?
It creates this built-in upward pressure, aligning the protocol's success with the interests of token holders. It's a strong incentive to hold long-term, a pretty compelling fundamental case for its value, a powerful mechanism.
All right, now let's talk charts. The sources mention a megaphone chart pattern for TRX. Sounds loud. For those of us not glued to TradingView, what does a megaphone pattern look like, and why are sources suggesting it points to a potential upside breakout? Seems like it could go either way.
Yeah, it does seem a bit abstract, like reading tea leaves sometimes. But these patterns often reflect the collective psychology, the push and pull in the market. A megaphone pattern, or an expanding wedge, is when the price swings get wider and wider.
Higher highs and lower lows.
Exactly. Visually, it diverges, like a megaphone shape. It usually signals increasing volatility and, frankly, indecision. Both buyers and sellers are pushing harder.
So why an upside breakout potential for TRX?
Good question. Appearing after a period of consolidation, like it might be for TRX, it's often seen as a coiled spring. While it shows indecision, the potential upside breakout suggests that within those wild swings, buying pressure is actually building up more strongly.
Okay.
Traders aren't just looking at the shape. They're looking for a decisive break above the upper trend line of that megaphone.
And volume matters here.
Critically, That breakout needs to be confirmed by a significant surge in trading volume. That's the trigger. It suggests buyers have finally overwhelmed sellers, momentum has shifted, and you can see a rapid, sometimes explosive move up.
High stakes, but potentially high reward if it plays out.
Precisely. It's a pattern that signals a potential major shift, offering a possible entry point if that confirmation happens.
Okay, so we've got Tron with its infrastructure role and scarcity. Let's shift gears slightly to the heart of DeFi. Our sources point to another potential blue chip, Maple Finance, or SYRUP, and its recent growth is, well, it's pretty staggering.
Yeah, the TVL numbers are eye-popping.
Right. Total value locked, TVL, it jumped from around $300 million earlier this year to over $2 billion now. That's like a 7-fold increase. What does that tell us?
Okay, TVL is arguably the most crucial metric for judging a DeFi protocol's health and actual adoption. It's the total value of assets locked in its smart contracts, basically, the working capital in the platform for lending, borrowing, etc.
So a big jump means?
A jump like Maple's, 7x in months, is a massive indicator of several things. First, dramatically increased user adoption and confidence. People are putting serious capital to work there.
More activity, more trust.
Exactly. More lending, more borrowing. It solidifies Maple's position. Yeah. Second, it suggests growing trust in the protocol's security and functionality, which is paramount in DeFi, where risks are real.
So that 7x isn't just a number, it's proof of life.
It's proof of significant life. It's a direct measure of market confidence, real utility, and the protocol carving out a serious niche in the DeFi ecosystem. Its services are clearly resonating.
And technically, Serapi is showing a bullish flag pattern, which apparently indicates trend continuation. For our listener trying to understand momentum, what does a bullish flag look like? And what does it imply for Serapi's next move?
Right, the bullish flag is a classic continuation pattern. It's like the market catching its breath. You typically see a sharp, almost vertical run-up in price. That's the flagpole.
Okay, the initial surge.
Then it's followed by a temporary consolidation period. Usually the price drifts slightly downward or sideways in a narrow range. That's the flag.
So it pauses after the big move.
Exactly. It indicates the market is taking a pause, maybe digesting the gains, letting new buyers come in, shaking out weaker hands, before potentially resuming the original upward trend.
So for Serap, this means?
It suggests that after its big run-up, likely fueled by that TVL growth, it's now in a healthy consolidation, catching its breath. Once this phase ends, the pattern implies a strong probability the price will resume its upward trajectory, maybe with similar force as the initial flagpole.
What's the signal to watch for?
The key is a breakout above the flag's upper trend line. Ideally, you want to see that happen on increasing volume. That often signals the continuation is starting. It can be an entry point for those who missed the first leg up.
But watch out for fake-outs.
Always. Confirmation is key to avoid those bull traps, where it pops up briefly, then falls back down.
Got it. Okay, our third blue chip spotlight is on Stellar Lumens XLM. The sources mention it's charting both a falling wedge and a golden cross, and they stress these are rarely bullish signals that precede breakouts. That sounds pretty significant.
It is significant. The combination of those two is particularly potent, something technical analysts get quite excited about.
Okay, break them down for us. Falling wedge.
A falling wedge is a bullish reversal pattern. You see price making lower highs and lower lows, but the lines connecting them are converging, sloping downwards. It looks like a wedge pointing down.
Right.
It suggests selling pressure is fading, the swings are getting tighter, sellers are getting exhausted, basically, and buyers are starting to gain control, hinting a breakout to the upside is getting likely, like compressing a spring.
Okay, and the golden cross sounds positive.
It is. The golden cross is a longer-term bullish signal. It happens when a shorter-term moving average, usually the 50-day, crosses above a longer-term one, like the 200-day.
What does that crossover signify?
It's widely seen as strong confirmation that a sustained upward trend might be starting or resuming. It shows recent momentum is powerful enough to overcome the longer-term trend.
So having both on XLM's chart.
That's the kicker. Seeing both a falling wedge suggesting an imminent reversal and a golden cross confirming a longer-term bullish shift. That implies a very strong potential for a significant, sustained move upwards. Short-term and long-term signals aligning bullishly. It's a compelling setup.
And the sources mention a specific bullish target for XLM, revisiting its 2024 highs around 0.63577. Now, when a coin targets a previous high, is that mostly a sign of strength, or is it a major resistance level it might bounce off?
That's a great question. It's actually both. Initially, That previous high acts as major psychological and technical resistance.
Why?
Because a lot of people who bought near that peak before are now just waiting to get their money back. So when the price approaches that level, they start selling, creating pressure downwards.
The break-even sellers.
Exactly. It can cap the ascent, at least temporarily. However, if the price manages to decisively break above that previous high, especially with strong volume,
That's really bullish.
then it becomes a powerful signal of strength. It means the buyers absorbed all that selling pressure and still pushed higher. It shows real conviction. And often, once that old resistance is broken, it flips and becomes a new support level, a new floor.
So for XLM, hitting 63577 is a test.
A critical test. Getting past it would strongly confirm the bullish trend and could open the door to much higher prices, what traders call price discovery. A significant new leg up.
Okay, this is fascinating. So we've got the confirmed bull run, these potential blue chips like TRX, HESRP, XLM showing strong signs. But let's pull back a bit. Why does this matter for you, the investor, in the bigger picture? What are the broader market forces that could keep fueling these alts, maybe even after Bitcoin and Ethereum take a breather?
Right, connecting it to the macro landscape is crucial. And there are two massive factors potentially creating, well, almost unprecedented conditions for altcoins right now.
Okay, what are they?
First, you have the whole situation with ETF approvals. We saw the huge impact of the spot Bitcoin ETFs, right?
Yeah.
Billions flowed in, legitimized the space for TradFi.
Huge deal.
Now, the anticipation is building for spot Ethereum ETFs and maybe even other crypto products down the line. These aren't just minor updates. They dramatically lower the barrier to entry for a vast pool of traditional capital.
Like pension funds, big money managers.
It's exactly. Pension funds, wealth managers, even just regular folks using their standard brokerage accounts, people who wouldn't touch crypto directly before because it was too complex or unregulated. ETFs make it easy, familiar.
So more demand, more legitimacy.
It opens the floodgates for capital that's been waiting on the sidelines. It's potentially a game changer for overall market liquidity and demand.
Okay, that's one factor. What's the second?
The second is the outlook for interest rates, specifically anticipated U.S. Federal Reserve rate cuts.
The cheap money argument.
Pretty much. Historically, when central banks cut rates, it makes borrowing cheaper, often to stimulate a slowing economy. Traditional safe haven assets like bonds become less attractive because their yields drop.
So investors look elsewhere for returns.
Exactly. They start searching for yield, moving into riskier, higher growth assets. That often includes equities and increasingly includes cryptocurrencies. It's a classic risk-on environment. That potential influx of liquidity acts as a powerful tailwind for crypto.
So ETFs opening the doors, potential rate cuts providing the fuel.
Precisely. And these two factors feed directly into what's known as the capital rotation thesis. It's a pattern we often see in maturing bull markets.
Okay, explain that. How does it work?
Well, typically, in the first phase of a crypto bull run, Bitcoin and Ethereum lead. They're the biggest, the most recognized. They absorb that initial wave of new money.
Makes sense.
But once BTC and ETH have made significant gains, maybe they've doubled, tripled, whatever, investors often start to take some profits.
And put it where?
They rotate that capital into smaller altcoins that haven't popped yet. These alts, with their lower market caps, have the potential for much larger percentage gains, 5x, 10x, sometimes way more. It's the hunt for higher returns, higher beta.
Moving further out on the risk curve.
Exactly. And the key thing, as our sources emphasize, is that this rotating capital tends to flow into strong altcoins, ones with solid fundamentals and technicals like the blue chips we've been discussing.
So understanding this rotation is key for positioning.
Absolutely crucial. It helps you potentially ride multiple waves of the bull market, not just the first big BTC wave. It's about anticipating where that next wave of capital and therefore opportunity might flow, being proactive.
That makes perfect sense. It's about seeing the next phase coming. But, positioning yourself can sound a bit like trying to time the market perfectly, which everyone says is impossible.
Right.
Are there actual tangible signs a listener can watch for to see this rotation happening, or is it more like feeling the vibes?
Yeah, well, there's always a bit of feel, but there's definitely some science too. It's less about perfect timing, more about recognizing market phases. A key indicator is Bitcoin dominance.
Okay, Bitcoin's market share of the total crypto market.
Exactly. When Bitcoin dominance is high and rising, capital is mostly flowing into Bitcoin. But after Bitcoin makes its big move and profit-taking begins, you often see Bitcoin dominance start to decrease.
So money is moving out of Bitcoin relative to alts.
Precisely. That's often the signal that altcoin season could be starting or accelerating. Capital rotates out of BTC dominance and into alts, which then start to outperform Bitcoin on a percentage basis.
So watch the Bitcoin dominance chart. Anything else?
You can also watch the trading volume flowing into specific altcoin sectors or individual promising alts. A sudden surge in volume for coins that haven't run up massively yet often precedes their price breakout. It's about seeing where the attention and money are starting to shift.
So identifying the phase, looking at dominance shifts, watching volume flows. Got it. It's more about preparation than prediction.
Exactly. Strategic positioning based on observable trends.
Fascinating. Okay, so while these blue chips are key, the crypto space is always evolving, right? There are always newer projects, maybe not blue chips yet, but showing real promise. Our sources mentioned a couple of these rising stars and also established players finding new energy. Let's talk about Remittix, RTX.
Yeah, Remittix, an interesting one.
It's described as a pay-fi platform targeting fiat crypto remittance. That sounds like a very specific real-world problem it's trying to solve.
It really is, and the remittance market is huge. We're talking hundreds of billions of dollars sent across borders every year.
Mostly through traditional banks, right? Which can be slow and expensive.
Notoriously slow, expensive, and inefficient, especially for smaller amounts or to developing countries. So Remittix, using a pay-fi payments plus DeFi approach for fiat to crypto remittance, is tapping into a massive potential market with a clear value proposition.
Faster, cheaper transfers using crypto rails.
Potentially, yes. Faster, cheaper, more transparent, circumventing the old banking hurdles. This isn't just speculative tech. It's aiming to solve a tangible global problem for millions. That's a powerful use case.
It sounds like a strong niche.
It's a very strong alternative use case for blockchain, moving beyond just finance into practical, everyday improvements. It combines efficiency with financial inclusion.
And the sources mention it's raising funds, nearing $20 million, and is on track for a centralized exchange listing. Okay, who typically invests in these sort of under-the-radar projects, and why is getting listed on a CEX such a big deal?
Good questions. Investors looking at projects like Remittix early on are often VCs, angel investors, or experienced crypto investors searching for what's called asymmetrical returns.
Meaning huge potential upside.
Exactly. The chance for truly outsized gains, 50x, 100x, that you likely won't get from Bitcoin anymore. The appeal is the immense growth potential if they execute well and capture market share.
And the funding, $20 million isn't nothing.
No, raising that much is significant validation. It shows strong initial confidence from sophisticated investors in their concept team and tech. And the CEX listing, that's often a pivotal moment.
Why is it so important?
Because getting listed on major centralized exchanges dramatically boosts the token's visibility, liquidity, and accessibility. Suddenly, millions of retail and institutional traders who use platforms like Binance or Coinbase can easily buy and sell it.
Opens it up to a whole new audience.
A much, much wider audience.
Yeah.
This exposure often leads to significant price appreciation and volume surges. That's why early investors watch for those listing announcements so keenly. It's higher risk, definitely, needs serious homework, but the potential reward is the lure.
Makes sense. Okay, beyond the brand new players, we're also seeing established coins finding new life. Solana, SOL, for instance. It recently crossed $200 again, a big psychological number. Sources say it's driven by a surge in futures and developer activity. Why are those two things bullish for a layer 1 like Solana?
Okay, for a high-performance blockchain like Solana, those two factors are incredibly bullish. And here's why. A surge in futures activity often signals growing institutional interest.
The big money playing.
Yeah, futures markets are where larger, more sophisticated players often hedge or take directional bets. Increased volume and open interest there suggests growing conviction from institutions who do deep due diligence. It's less retail froth, more sustained strategic interest.
Okay, and developer activity.
That's arguably even more important for a layer 1's long-term health. Strong developer activity means the ecosystem is alive and growing. People are building things on Solana.
New apps, new protocols.
Exactly. More dApps, more innovation, attracting more users to the chain. That directly translates to increased utility, adoption, and ultimately network value. So, combine institutional interest via futures with a thriving developer scene. That suggests Solana's growth is fundamentally strong, not just speculative hype.
A healthy, expanding ecosystem. Got it. And then there's Litecoin, LTC, described as edging closer to a breakout around $135. Litecoin's been around forever in crypto years, right? Sometimes feels like old news.
Yeah, it's one of the OG altcoins, often called digital silver to Bitcoin's digital gold.
So what's its enduring relevance, and why does a breakout at $135 matter now?
Its relevance comes from that history and reliability. It was designed as a faster, lighter Bitcoin, better for smaller, quicker payments. While maybe not as flashy as new DeFi stuff, its long track record, robust network, and wide recognition give it a level of trust.
People know it works.
Basically. And in a big bull market, sometimes that boring reliability attracts new money looking for something established beyond BTC and ETH, but may be seen as less volatile than brand new projects.
So the $135 breakout.
That would be technically significant. $135 seems to be a key resistance level for LTC, a price it struggled to break past. Getting decisively above it would suggest that selling pressure is finally exhausted.
Could signal a new trend.
It could signal the end of a long consolidation and the start of a new, potentially strong upward move. For holders and potential buyers, it suggests Litecoin might be waking up and ready to participate more strongly in this bull run, potentially aiming for much higher levels.
Interesting. Okay, so taking all this together, the confirmed bull run, the institutional backing, these specific altcoins showing strength or potential, the macro tailwinds.
Yeah.
It leads to this idea analysts are talking about, super cycle potential.
Yeah.
The S word. Yeah. And the sources say analysts are urging building positions in undervalued, high-potential altcoins early. That sounds urgent. What exactly is a crypto supercycle, and why the rush to position now?
Right, let's unpack supercycle. In traditional markets, it means a really long period, maybe decades, of strong growth driven by some fundamental shift, like a new technology changing everything.
Okay. And in crypto?
In crypto, it implies we might be moving beyond the usual 4-year boom-bust cycles tied to Bitcoin halvings. Instead, we could be entering a prolonged era, maybe years long, of exponential growth fueled by true mass adoption.
Driven by what?
Multiple things converging. The institutional adoption we see with ETFs, clear regulations making it easier and safer for people and companies to get involved, and crucially, real-world utility becoming mainstream. Blockchain actually transforming industries, not just being used for speculation.
A fundamental shift, not just another cycle.
That's the theory. And the rationale for building positions early in high-potential alts. It's straightforward. The truly massive percentage gains usually happen before everyone else piles in.
Getting in on the ground floor, essentially.
If we are in a supercycle, then the initial BTC and ETH surge is just Act 1. The really explosive growth, percentage-wise, might come from those altcoins that have strong fundamentals, solve real problems, but aren't household names yet.
Catching the steepest part of the growth curve.
Exactly. Identifying projects with real value and a path to utility before they become obvious, before mass adoption drives prices parabolic. It's betting on the future, based on conviction about the tech and its potential.
Okay, for our listener, that sounds like a massive opportunity, but also pretty high stakes. How does an individual even start to identify these undervalued, high-potential alts? It sounds hard. And what are the real risks of trying to be that early?
You're spot on. It's definitely a balance. Identifying them requires digging deep. You need to look at the use case. Does it solve a real problem? The team, are they credible, experienced? The technology, is it sound, scalable, secure? The community and partnerships, is there real support? And of course, the tokenomics, is the supply sensible? Is there utility? Any burn mechanisms?
So serious fundamental analysis.
Absolutely. And on the technical side, maybe looking for those early signs like breaking out of long bases or forming those bullish patterns we talked about, always checking for volume. But the risks are real and higher.
Like what?
These early projects are often way less liquid. Big buy or sell orders can move the price dramatically. They're much more volatile. And there's significant project risk. Maybe they failed to deliver, run out of money, or just never gain traction. Many don't make it.
High failure rate.
Yes. But the flip side is the reward. If you pick right, the gains from a project going from, say, a $50 million market cap to $5 billion are life-changing in a way that's much harder to achieve with Bitcoin now. It's high risk, high reward. Needs homework, patience, and a long-term view. Years, maybe, not months.
Right, conviction and patience. Okay, this flows perfectly into how investors actually see these trends. It's not always about staring at complex charts, right? It's about translating the signals. How do savvy investors weave together, say, TRX's megaphone pattern with its tether volume, or SireP's TVL growth with its bullish flag? How do they build that complete picture?
That's the real skill, isn't it? Confluence. It's never about just one signal in isolation. It's about seeing how multiple independent indicators, both fundamental and technical, line up to tell a coherent story.
Okay, so take TRX's megaphone.
Right, the megaphone signals widening swings, increasing volatility. Okay, noted. But then you overlay the fundamental fact. It handles billions in USDT daily. Deep, real-world utility.
So the confluence is...
The confluence tells you,
Yeah.
here's a fundamentally important network showing technical signs of building explosive pressure. When or if it breaks out above that megaphone trend line with volume, it's not just lines on a chart. It's likely the market finally recognizing and pricing in that underlying fundamental strength. The technicals pinpoint when the fundamentals might assert themselves.
Using technicals to time the fundamental recognition.
In a way, yes. And similarly for SIRBIP, the bullish flag says, healthy pause after a strong run. Okay? But why did it run strongly? Because its TVL just exploded 7x, showing massive adoption.
Ah, the fundamental driver.
Exactly. So when SIRP potentially breaks out of that flag pattern, you're not just seeing a chart move. You're seeing the market finish digesting that huge fundamental growth spurt and signaling it's ready for the next leg up based on that proven utility. It helps time entries within a fundamentally strong trend.
And XLM's golden cross. We know it's bullish, but re-emphasize why that, especially with the falling wedge, points to long-term strength.
Because the golden cross specifically compares short-term momentum, 50-day average, to the long-term trend, 200-day average. When the short-term crosses above the long-term, it signals a fundamental shift in the underlying market dynamics, potentially lasting months or years.
Not just a quick spike.
No. Combined with the falling wedge suggesting sellers are exhausted, it implies a sustained change. Investors see it as strong confirmation for building or holding long-term positions, believing the asset's trajectory has decisively turned upwards for the foreseeable future.
Okay, so like you said earlier, these metrics, TVL, transaction volume, they aren't just abstract data points. They're direct signs of real-world activity. Right?
Absolutely. They are the heartbeat, the proof of life. CRP's rising PVL is people locking assets using the platform. Real capital, real trust, real activity.
Tangible usage.
Tangible usage. And TRX, handling billions in Tether. That's irrefutable proof it's a critical piece of infrastructure in the crypto economy, facilitating actual financial flows globally. It shows a utility far beyond just holding or trading the token itself. These metrics ground the speculation in reality.
They show economic activity is happening on-chain. Powerful. Okay, that's incredible insight. It really is about spotting those signals and understanding what they mean together. And that brings us to you, our listener. We genuinely want to hear your take.
Yeah, definitely.
So let me ask you, have you spotted any chart patterns lately, maybe a confluence of signals that made you think, okay, time to act? Share your analysis in the comments. We love reading it.
Or maybe you think capital's rotating too fast into alts. Are you still focused on Bitcoin and Ethereum, waiting for a different signal?
Yeah, tell us. What are your allocations looking like? What's your gut feeling, your personal conviction telling you about where this market is headed? Your perspective makes this conversation richer for everyone. All right, as we start to wrap up this deep dive, let's just quickly hit the key takeaways. What have we really unpacked today?
Well, the big headline, the crypto bull run looks confirmed. Not just hype, but backed by institutional flows. Key metrics like BTC nearing highs and that massive $4.13 trillion market cap.
Right. And we zoomed in on those blue chip alts, Tron, TRX, acting as a vital settlement layer with huge tether volume and deflationary pressure.
Maple Finance, that's YUP. But that incredible 7x TVL growth showing real DeFi adoption and trust forming that bullish flag.
And Stellar Lumens, XLM, showing those rare, powerful, bullish signals, the falling wedge and the golden cross pointing towards potential major reversal and targeting previous highs.
Then we looked at the bigger picture. Those macro forces like potential ETF approvals opening the doors further and anticipated Fed rate cuts possibly fueling the fire, setting up that capital rotation thesis.
Where money flows from the leaders into promising alts. And we saw emerging players like Remittix tackling that huge remittance market, gaining funding and heading for listings.
Plus established names like Solana finding new momentum with institutional interest and developer buzz, and even Litecoin showing signs of life, potentially breaking key resistance.
So understanding these cycles, the rotation, mixing the fundamentals with the technicals, that seems absolutely key right now.
It really does. Which leads us to maybe a final, more profound thought to chew on.
Okay, leave us with something deep.
As we see this confirmed bull run, this institutional interest, this rotation into altcoins, solving real problems, What's the fundamental shift being signaled here? Is this just another, maybe bigger crypto cycle playing out?
Or something more?
Or are we genuinely witnessing the early stages of mass adoption? A systemic shift in how finance works, how value is transferred, how decentralized systems integrate into the global economy. Is it just a cycle, or is it the start of a decades-long transformation?
Yeah.
That's the big question, I think.
Wow. Yeah, that is the big question. Takes it way beyond just prices. A lot to think about there. And for you listening, back to the specifics, who's keeping an eye on those under-the-radar projects like Remittix, let us know if you think it's got breakout potential.
Yeah, what's your conviction telling you?
What is your conviction telling you about the future here? And how are you positioning for it? Your insights, seriously, they're gold for this community.
Definitely.
And hey, if this breakdown, this deep dive, helped clarify your thinking on altcoins or the market right now, please do us a huge favor. Hit that like button, subscribe if you haven't already, and definitely ring that notification bell.
It really does help.
It honestly makes a massive difference. Your engagement, the likes, the comments, the subscriptions, sharing, that's how you directly support what we do here. It boosts us in the algorithms, lets more people find this, and frankly, it allows us to keep putting in the time and effort to bring you these sharp, actionable crypto insights.
We appreciate it.
We really do. So thank you for that. And thank you for joining us on this deep dive today. Until next time, stay curious, keep learning, and we'll talk soon.